I think I was one of the few to start talking about the run to gold. And I kept emphasizing that the run to gold has begun. And people are kind of scratching their head because I was doing it when gold was actually going flat. In other words, it was just going sideways, wasn't moving up, wasn't moving down, it's just going sideways. I said, the run to gold has begun because the smart money's moving into gold in a big way. And that was when the central banks started having to report how much gold they had bought on an annual basis. And it was setting records. In fact, it set records 2 years in a row. And I emphasize the fact that the run to gold is a metaphor for how all markets move, but particularly, I think, gold. And the reason I say that is the old adage, there's no fever like gold fever. And gold becomes a need beyond a want at the end of a currency crisis or as a currency crisis matures. So what's happened is we see it as a metaphor. It's a very leisurely walk, and then it's a full walk, and it's a brisk walk, and it's a jog, and then it gets into a run and an all-out sprint. That's a metaphor for how the market moves. The sprint is the manic panic phase where the latecomers come in and buy all things gold. Gold coins, gold bars, gold futures, gold options, any mining stock that has gold in the name, ETFs, you name it. That's probably a year or two away, probably 2 years away, but no one knows the future. So gold finally broke out of that channel formation, and it started to move substantially higher. And now, as you say, we're hitting new highs, kind of week after week. Get used to it. I remember when Cisco, which was the darling of the tech boom, 20 years ago, and I remember one of the financial channels saying, I can't believe it. This stock goes up every day. And it almost did go up every day. I think we're going to see that in gold. And we're going to get, continue to get new highs. Now, having said that, silver has been lagging, as we talked about. I don't know if you want me to dive into that yet or not.
What speed are we moving at right now? You using the runners
We're in a
analogy here.
we're past the light walk where no one notices. The fund managers, nation states, other nation states, the repatriation of gold coming out of the LBMA. So we've gone from the light walk to walk. Maybe we're approaching a light jog right now. So it's like, wait a minute, I got to get going on gold. Where's my gold? We own it. Let's get it into our hands. Let's not leave it at the Bank of England. Let's get it in our hands. So starting to gain momentum. It's starting to get more into mainstream news, as you well know, and people are paying attention to it. In fact, even Powell has to, mention the word gold once in a while. So it's starting to come into the consciousness now. My thoughts are similar to yours, Kai. I think that we're overbought. That's unquestionable, but you can be overbought in the market for a very long time. Cisco was a great example of that. Having said that, all the good news is out in gold. I mean, there really can't be much more beneficial news on gold, really. And so I think we're probably going to establish a trading pattern here around the $3,000 level. Is it possible to drop below there and go lower? Yes, it is. I'm not predicting that. And I could be wrong. I mean, one thing we really don't want in a market is something that just takes off to that final phase where you get to where it just goes up and up and up, goes parabolic, and you've got to pick a place to get out. And that will happen in gold, I'm convinced, but we're not there yet, as I said a moment ago. However, it would be good, in my view, if we kind of back and filled, as the expression in the commodity sector, where, we get a nice new high and then it comes back down and people get a little disappointed. Gold's not going to break through 3,100. And we get established. It's really good to actually get a longer duration market, more participants, more liquidity. People get slightly disappointed, and then it continues on its path upwards. So that's what I think may be taking place. But, I've been saying that for a while now, and it does keep making these new highs. But they're kind of nominal. They're not like, astronomically higher, but that's how new highs are made. So hopefully I didn't overthink that.
No, it's an interesting move, of course, and it all started, maybe I'll have to rephrase that, but it seems like the limelight has been shown on gold with the talk about Fort Knox, of course, and the Fort Knox audit, and then, of course, tariff talk, meaning or the interpretation that gold's been moving back to the US because of tariffs as well. That was in the headline news. Even the Atlanta Fed, with their GDP Now index, stumbled over gold because they forecasted minus 2.8 or 2.4% negative GDP because of the gold imports, causing a massive trade imbalance here. How significant is gold to the economy and maybe as a warning sign right now, especially at this level? Like, are we putting too much importance on it or maybe not enough even?
That's a that's a tough one to answer. I mean, uh, too much importance on it in the terms of GDP and how much it will affect in today's current economy. You never can overemphasize enough about gold or silver's importance in the scheme of reality, meaning that without a truthful, honest monetary system, we're doomed in the long run. So, I have to answer from both sides of my mouth. I mean, my mission statement is to teach and empower people to understand the benefits of an honest financial system. We can't look each other in the eye and meet our obligations on a sound basis where there's value for value. We're screwing each other. And this is what the United States has done from August 15th, 1971. They're saying, hey, take this piece of paper that has an intrinsic value of zero and give us your labor, your goods, your services, your, whatever it is. So that system has been over 50 years. Usually you get a comeuppance around that time frame, and I think we're starting to see it now. So hopefully I made my answer clear. Philosophically, morally, structurally, universally, worldwide, it's extremely important to have an honest, sound financial system. I don't use gold or silver in my mission statement. We could do it theoretically with a paper system, although that's never worked. But gold fails as well, and it's not gold that fails. It's man's intervention in the gold. For example, for the United States saying, hey, we can back all of our dollars, all of our pieces of paper at $35 the ounce until they couldn't because they lied about it. They printed more pieces of paper than it was gold to back it up. And that was a human problem, not a gold problem.
What are your thoughts on revaluing gold on the U.S. balance sheet and maybe just to help cover some of the debt here?
Yeah, we wrote about it in our premium service. One, it doesn't do any good at all, really, to revalue gold at 33,000 the ounce, 3,500, even 10,000, because the amount of debt outstanding versus what the revaluation would mean in percentage terms of paying off the debt is more or less meaningless. What I went on to say, and it hasn't been talked about too much, is that the idea of how do you get good debt? Good debt is collateralized. You're putting up your house, which is an asset to borrow on, or your car, or whatever. And there is no real collateral behind the United States unless you remonetize gold at 50,000 an ounce or something. So, but there's this idea floating out there that we will take all the assets, quote unquote, in the United States, all the parks, all the land that the U.S. owns, basically, and all the minerals under that land, and all the trees and the pine needles and the animals and the lakes and the rivers, and we'll collateralize those on a blockchain type of system. And that will give us the collateral we need to keep this scheme of printing money going on for a long, long time. Because if you tokenized all the quote unquote assets that I just named, you would have collateral backing up the debt. And is that going to take place? I don't know, but it has been mentioned. We wrote about it extensively in the Morgan Report, and it's something that concerns me because it keeps this system that largely is unfair continuing.
David, we have to talk about gold holding up versus other asset classes, and gold, U.S. dollar comes to mind here. Yes, it's been a bit lower, but it's still trading at 104.3 or so on the Dixie if you compare it to other currencies. So it's not really weaker against gold. It's been holding in there. Like, what's the role of the U.S. dollar in gold's strength right now? Where do you see it fit in?
To me, this is probably one of the most important points that we can discuss, Kai, and here's why. Normally, gold and the dollar go opposite. But at the end of the Great Reset, what you see is that they move up together. And the reason is on the extra pyramid, the liquidity squeeze, where people start to distrust their derivatives. They're worried about their housing price, commercial real estate's in the dumpster, even stocks are overvalued. As they start to look for what do I need to do? I need to save more quote unquote money. For most people, that money means the US dollar, even in foreign countries. Remember, 60% of the printed pieces of paper are overseas. And this is because if you're in Venezuela or Argentina or Turkey or some of these other places, you're actually using physical US dollars in trade on the what is called the black market. Really, it's the free market. And so that's the most coveted. The second below that, that's the most coveted financial history, is gold. So gold and dollar going up together, or dollar remaining strong, means that we're nearing the end game. We're nearing the end where people value losing least. In other words, in a depressionary environment, be it a hyperinflationary depression or a debt liquidating depression or a severe stagflation, you want security, and security means liquidity, and liquidity means what's in your wallet, what you could spend for anything. You don't have to take a stock and convert it to cash. You've already got the cash. So this is an indicator to me that we are getting near what I consider to be the last leg up in this major market in gold and silver. I think silver will participate. And we need to look at what sectors are moving against what. Final statement. I think of all the asset classes, gold has outperformed the last year or so. So we're talking real estate, bonds, stocks, almost anything you can name, gold has outperformed it, which means when you measure against a constant, because gold is an ounce of gold, the mass is the same anywhere in the universe at all times. So gold is your stable coin. When you look at it being better than anything else that you can measure against it, it means we're getting near the end.